Hello and welcome to this little special edition of Kramer's Corner. It is not a daily technical update, it is an update on some of the most traded stocks, especially in the technology sector, semiconductors and so on. Just to recap, some of them have already reported earnings, some of them will in the coming times, and I will also follow up on that in the coming days and weeks. But let's start with the SOXX Index, or the Semiconductor Index / ETF. Here is it's the ETF. We can see that it formed a bearish engulfing back in March, and it was followed up with another bearish engulfing right there when it actually broke this rising trend line here, and the selling started. It went straight through the minor support here to 111.38, around that level, dip lower, and then we had a really bit of rebound, but it was rejected once again. And so now it's actually a pretty tough resistance, and we could see the SOXX, or the semiconductors, pushing lower or sliding lower in the coming weeks. Support around 193.94 and then around 178. If we're looking at the weekly chart, just zooming in, it's actually quite interesting to see how the volume has been declining over the past few weeks. It's a little bit only picking up when the selling pressure increased, and it came after a doji evening top formation, or actually a star formation here, doji evening star formation. That is a fairly strong top and reversal pattern. Combined with these on the daily chart. Moving on to Alphabet, and here's the C share. It's been bounced really strongly since March, gapping a couple of times on the way up. Still in an uptrend. It is a little bit stressed. You can see that the values here on the RSI declining slightly. But let's have a look at the weekly chart where we are. We are still in an uptrend. They should be reporting earnings after market today, so that can be really interesting. It can either move higher or lower. And apparently it seems like market is still very bullish on Alphabet. Only worry is that the past few weeks you can see how the volume has been declining in this push up here. So the strength is not that, the uptrend strength is not that strong, to say the least. We could be in an exhaustive mode. Look out for a close below that little spike down there, 153.91. If we do close below that tomorrow after earnings, then it can really spell some trouble for Google C share, Alphabet C share. Here we have Amazon. Key support 127.27, or around 127. Dipped just the other day to test the cloud. We're still above. However, we do have RSI just below 40. We are in a negative sentiment. But if some good results can come out, I can't remember exactly when they are reporting earnings, it can lift it. However, the selling yesterday was not that promising for Amazon. And if it takes out 127, then, well, we could see a sell-off down to this gap area here between 165 and 161 and a change. If we're looking at the weekly chart, also here we can see how the volume has basically been declining for quite some time, especially during this uptrend here at the past couple of quarters, and it actually formed this massive bearish engulfing, taking out 3, 4, 5 weeks previous trading. Key support around 165.75. So it was rejected up here at 188. So really heavy for Amazon, and it really needs some good news to resume uptrends. Looking at Apple, that has been quite volatile lately, pushed up 2 weeks ago, just hit the 55 moving average just below the cloud and just below the 178.67 resistance area here, and then sold off, and now we're back down here to actual lower levels at 165, then a little bit of a bounce. What is interesting is we have the RSI showing divergence. You can see the values that are rising. But market has been pushing lower, price been pushing lower. So there's a little bit of maybe exhaustive mood on Apple. But if we're looking at the weekly chart, which is also quite interesting. We could have this massive double top pattern here. This is the valley. So if it does close below, and it actually did last week, close below the valley. So it actually been confirmed, meaning that in coming weeks and months and so on, it is indicating that we could see a push lower. And then how much lower? Well, the way to measure it is basically taken from around the peak to the lower part of the valley here, and then added to that. That's the rule of thumb. However, there are of course some support levels on the way, and we can also add some Fibonacci to it and say, okay, so how low can we actually go? And it could be some levels around, let's see, 61.8 is just around the key strong support level of the base consolidation area down here, but there's also the upper part which is 155.23. However, if it does break back above the cloud on the weekly and closes this gap area here, well, then it is likely to be to demolish this double top pattern. And that will also be above this. If it does close above here, then I will say the double top pattern has been demolished and we have a new situation. But until then, it is actually still intact. Moving on to Meta, it is indicated to open around 424, 425, as indicated by this dashed line here, and that's a 15% lower. It's trading that in the after and pre-market, and that's a bit of a hammering for this former Facebook, and it's right in the gap area here, and that is really interesting for a couple of reasons. First of all, will be below the cloud, we'll be below the 100 moving average, and if we can get Meta to close below 403.59, which is the upper part of the body gap area, and that's the one here, then it really looks bad for Meta. But let's see, we're probably not there yet. If we can close higher today, especially back above and in the cloud, then there could be a little bit of relief rally the next couple of days for Meta, and especially if they can close above the upper part of the gap, meaning above the 453. But it's been quite stressed, as you can see here, high levels on the RSI on the weekly, the declining traded volume, so a little bit up in there. We need to see how it will close the next couple of days. Microsoft key support around 397, as you can see here, tested several times, and then it bounced and it did it again. We are still above the cloud, we are still above the 100 moving average, but we are in a negative sentiment on the RSI. So there is some pressure and exhaustion. That bearish engulfing there was a bearish move there was really, really bad. And also we have a top and reversal like pattern right there about a month ago or so. On the weekly chart, we can also see here that the declining volume during this uptrend is also a bit of a worry. And you can see here we actually have a large bearish engulfing taking out at least those. It didn't take out that, so it's not that worried. But again, look out for the 397 support level. Nvidia. Very interesting, actually, also from a technical point of view. We had a double top. We have two bearish engulfings up there, a massive one, then a big one here. We have this gap area that has been taken out. It tried to close it yesterday with the open, but got hammered just right from the opening and below. That is really a sign of weakness. Sellers are really in control. They're just waiting for upticks to sell off. Key support 742, but we could drift lower if they really push the sell button. To demolish this picture, we need a close back above the cloud, but at least back above 841.30, and it doesn't really look like it at the moment. We are in a negative sentiment on the RSI. Weekly chart also here. Actually, very good volume on the way up. So, and there's no divergence on the RSI, meaning maybe this is just a correction, and medium to longer term, we are likely to see higher highs. But it's still a little bit up there in the air. I would say I would wait and see for a little while. Tesla, that came with earnings the other day. It got rejected at this falling trend line. I didn't draw that one on the update yesterday, but here it is actually. And if it does close back below this support line here, just around 100 and what is it, 160 and a half, well then the downtrend is likely to resume and then close the gap here. That will be key the next couple of days. There has been divergence indicating the downtrend here is in exhaustive mood, but it really needs first of all to break above the falling trend line, and then back above 64 further upside potential. Read my technical piece yesterday on Tesla. You can see here it could be interesting here in the next couple of days. Where will it close? Will it actually form a bullish engulf, and then we can have a larger upside correction. Otherwise, we are still in a downtrend. Moving on to other very heavily traded stocks that I've also been talking about lately. ARM Holdings, that is trading in this gap area here. We need to add that one. Hang on, sorry about that. That one is missing. So that is the gap area there, just above. We spiked just above it, and sellers seems to be coming back in. If they're pushing back below the 94 level there, then I think we'll see a close of the gap, meaning sell-off down to 77. We are in a negative sentiment. It will be a bit of a struggle to get back up to there. It's not unlikely to happen. Again, there's no certainties, but it is really. It is under pressure, and again, if it jumps back below or trades back below 94.40, then selling pressure is likely to close that gap. Otherwise, we could see a little bit of further upside bounce. Not much to talk about on the weekly chart because we don't have that much history. So let's move on to super microcomputer that bounced off the support area here around 698, 663. It was actually the original one I had here, the 698. So it seems like the 100 moving average is also giving some support. We're below the cloud. We need to get back above for full-blown bullish sentiment. I don't think that will happen. We could get into a pause mode if we close above 855, but it needs to at least break back up the falling trend line to establish maybe an uptrend. On the weekly chart, you can see really heavy sell-off, and you can really not that much heavy volume, but it is a little bit up in the air, I would say. So because there are also no divergence on the RSI indicating it is not unlikely we will move higher after correction, but I highly doubt it looking at the daily chart with these moves here. Finally, on a European one, I want to have a look at ASML. ASML is tested the 811.80 support, bounced up, got rejected at 858, and we are a little bit of range bound here. That is the range I want to see it break out of before I make an educated guess. However, I think we could come under pressure of this support there and the 800, which is the low part of cloud, and the 100 moving average. Then we could really come under pressure on the ASML. So they look. The semiconductors, they look a little bit heavy at the moment, to be honest. We can also see here how on the weekly it actually has broken barriers on the trend. All right, that's all for today. Please do check out the ARM Holdings, the super microcomputer, Nvidia previous updates I've done the past week or so, and Tesla from yesterday, and there will be more later. Next week, I do host a webinar on where I will have a view at the market, and then next week again I will have talk about the technical indicators I'm using. Thank you very much. Have a nice day and happy trading.